service of transportation of goods as per the section 2/93 of CGST Act. The supplier has contacted the shipping line and made the payment as well, and thus the supplier is the recipient of service, thus the importer is not liable to tax. Import of goods on FOB value. Now, the other situation is where the importer has hired the ocean freight service provider and makes the payment for the import of goods. So here the importer can be clearly defined as a recipient as per the section 2/93 above. Also, as per the above notification, the importer is included in the category of supplies liable to the reverse charge mechanism. Thus, if the shipping lines is located in a non-taxable territory, then GST is payable by the importer. That is, the recipient of service. If the shipping line is located in India, then the shipping line itself will have to pay GST on forward charges. However, in the case of import, custom duty is applicable on assessable value, and the assessable value includes freight amount. IGST is payable on freight element by including it in the assessable value of goods. So the applicability of GST on the RCM basis will lead to double taxation. Okay, let's see Gujarat High Court judgment explained here. Mohit Minerals versus Union of India. Fact: the importer was liable to make a payment of IGST at 5% under RCM, that is reverse charge mechanism, with a notification number 8/2017 on ocean freight service. Here, both the importer and the supplier are located in the non-taxable territory. The importer was engaged in the business of importing coal and discharged the custom duty on the assessable value, which includes freight. Additionally, he was also required to pay IGST on ocean freight, which leads to double taxation. And thus, the aggrieved taxpayer filed a writ petition before the Gujarat High Court, and this is the judgment came in. Entry number 10 of notification 10/2017 is ultra vires of sections of 5/3 of the CGST Act. The goods are imported on CAF value, and thus the importer is not the recipient of service of transportation of goods. Thus he is not liable to pay tax. Tax cannot be imposed twice under the same act. As per the section 14 of the Customs Act, customs duty is payable on the assessable value of the goods, which includes freight charges. Thus, IGST is payable on the freight element by including it in the assessable value. So again, charging IGST on freight amount will amount to be double taxation, which is unconstitutional. So extra territory levy. In this case, both the suppliers and the importer are located in a non-taxable territory. Such services are outside the scope of IGST Act. In this case, IGST can be applied only if the supply is done in the taxable territory. But in this case, both the service provider and service recipients are located outside India. Thus, the entire supply has taken place outside the taxable territory. Thus, IGST cannot be imposed on such a service. Okay, CAF value. What they are saying in CAF value is the purchaser is concerned only about the purchase value and has no idea about the freight charges, as they are directly paid by the supplier. Here, both are located outside India, and thus GST is not applicable. Thus, IGST is not payable by the importer under the reverse charge mechanism in the case of CAF transaction. Delegated legislation and judicial control. Both the notifications 8/2017 and 10/2017 are subordinate to the GST Act. Such notifications making the taxpayer liable to IGST under reverse charge or ultra vires to the IGST Act. The High Court held that it is unconstitutional as there is no statutory sanction for levy and collection of such tax. The dispute related to the levy of IGST on ocean freight is being analyzed by the High Court from time to time, but there is no clarification whether the above ruling can be applied in the case of FOB transaction as well. Thank you for watching EXIM Buddy. Have a great day.